Hi there, my name is Tim Kraus with Cornerstone CPA. I'm the operations partner. And a question that we do get from time to time, and kind of a misunderstanding that we definitely see, is people ask, can you be taxed with $0 in your bank account? Or the inverse of this, which we also get, how can I be taxed? I didn't take anything out of my business. This is something that we will go over here for our real estate investor clients. And the short answer is yes, because you are taxed on the income and that the real estate then generates and the capital gain, short term and long term. And real estate can be very, very complex tax wise. So we're going to keep this kind of high level, but hopefully you'll be able to understand the concepts behind this all. So let's dive right in here. So let's say that we start off with a bank account with $100,000 in it. Okay? Then we do a down payment on a property of $50,000. Then we have renovations on the property. This is going to be a flip property example. So the reno is going to equal another $50,000. Now we are invested our $100,000. And now let's say that we sell the property and we get our profit out of the property, our gross profit out of the property of $200,000. So we're going to have the sale, and then that's going to equal $200,000. Okay, so then our profit on that sale, our net profit, assuming no operating expenses, because that's what we're going to do to keep it simple here, would be $100,000. Okay, but now your bank went from $100,000 up here to now your bank now has $200,000. Awesome. Now we're going to be taking all that money, and this is not a 1031 exchange. We're not going to play that sort of game right now. Actually, this will actually show why the 1031 is so powerful. But in this case, we just have the $200,000 in our bank. We flipped a property, made $100,000. Awesome, good work. Now we're going to take that $200,000 and we're going to invest it into $1,000,000 property. So we have a new property, and so let's just go for the property here. For the property, and this property's value equals $1,000,000. Okay, you did the down payment of $200,000 for 20% down. Okay, which means in this hypothetical scenario, your bank is now empty. Now, please don't buy $1,000,000 property and have no reserves left over. I wouldn't recommend it. But in this scenario, and just for this one deal, your bank is essentially empty from that. You took all that money, you reinvested it back into your business, which is great. But it doesn't mean it's not taxable. So, let's assume that the building's value minus the land is $800,000. Okay. Therefore, doing straight line depreciation on a residential property at 27.5 years. Now, this is not itemized. This is not doing a cost seg, which there are pros and cons to that, and really depends on how long you're going to hold the property for and your tax situation. And eventually I'll be making a video on that because I see people mess that up all the time. But let's just say that we're doing straight line depreciation. So off the 27.5 years, because I already did the math off to the side here, that would equal $29,000 a year of depreciation. So depreciation, I'll clean that up here, equals 29K. Okay? But we still have our original profit in the deal. Now, still the profit from the previous deal, from the deal back here, is still $100,000. That profit still exists. It's just invested in something else. Our new expense, again, being very high level, our part that we're able to expense of that is only $29,000. The rest of it, this up here, the $800,000, that is what's called capitalized, which when you capitalize something, it means that it is an asset that is going to have long-term value, And so the IRS does not let us expense the entire thing at once. It has us do it over time. So your depreciation, the rate at which it depreciates, is based on what's called the cap schedule or capitalization schedule, which is different for different assets. They have different ones. We're just assuming a what's called straight line depreciation, which is basically the value depreciates like this, where the asset is assumed to be worth more money up here, and then worth less money down here. There is a cost seg which you'll be able to depreciate it faster. And there's also itemized, which you should be able to depreciate it kind of somewhere in the middle there. So we're just assuming a cap schedule that is straight line, which would then equal this $29,000 in this first year. So this means that we can't write off all this $800,000, only the 29 out of the $100,000 profit. So if we take our original profit, which still exists, even though it's invested, it still exists. The profit of $100,000 from the deal before, okay, and then we minus off the $29,000 from the depreciation. That still leaves us a taxable profit. Again, very high level here, very summary view of $71,000. Which we'll just assume a rough estimated tax rate of 21% in this scenario, which if we do a tax rate at 21%, that equals a tax rate or amount of tax of $15,000. So again, this is assuming you didn't do any repairs in the property and also your entire other tax situation, which I'm putting off to the side right now. But in this scenario, you would still owe $15,000 on the profit, on this profit from deal number 1, even though you reinvested it into deal number 2. So that is a high level of how you can actually still get taxed if you have $0 in your bank account. And also, this also shows that if you kept that $100,000 in your business bank account as profit, it would still have the same amount of tax on it. Like, that piece doesn't matter. Actually, we technically have more because there's no depreciation because you didn't buy the second asset. But that doesn't matter as much. It is the profit that is getting taxed here. So it's better to reinvest, obviously, because then you're going to be paying a little bit less. You'd pay $21,000 if it was just in your bank. But that is my answer to, can you be taxed with $0 in your bank account for real estate investors? The answer is, yes, you still can, because you're still having profits. Hopefully this helps. Thank you.